This is Bloomberg Crypto, a daily Bloomberg iHeart podcast, and I'm Stacy-Marie Ishmael, managing editor of crypto for Bloomberg News. It's Monday, November 21st. In a crisis, there are always losers. And in the aftermath of a crisis, some people will emerge in a stronger position than they were before. Who are some of the players who might emerge stronger from this crypto crisis? And how much of that is even linked to the increasingly tense conversation around centralized entities versus decentralized protocols? For more, I'm joined by Bloomberg reporter Sidhartha Shukla.
It's difficult for people to understand, okay, how is a bad actor going to get punished by somebody who's not there to punish them?
Sid, it's been a minute. Welcome back to the podcast.
Hey, thanks for having me.
So the funny thing is we're both recording this episode while we're in Singapore together. We are in the Singapore office because, well, why not? But also because, you, me, and the team have spent the past couple of weeks trying to figure out what is the long term of crypto in the aftermath of the bankruptcy filings of the FTX empire owned and co-founded by Sam Bankman-Fried. When we were talking about this, you made an interesting point about the debate between centralization and decentralization. I'd love for you to share with our audience a little bit of insight into the parts of the market that might actually benefit from some of the chaos that's happening right now.
Before we get into the aftermath of FTX and who stands to gain and lose, I would like to give some context with regards to, what cryptocurrencies were all about and how the entire industry has evolved in the last decade. So it started with Bitcoin being this decentralized currency which anybody can use, right? And the idea was to have no trusted third parties in this payment network. But the industry evolved in a way where if you wanted to get your hands on some cryptocurrencies, you either had to be tech savvy enough to set up your own mining rig and then mine some Bitcoins, or what you could have done, you could have gone to a exchange and you could have just exchanged some of your fiat currencies for some Bitcoins, right? And that's how the exchange model evolved in the space, and the reliance on, again, trusted third parties, gained prominence over the last 1 decade. So for a space that wanted nothing to do with trusted third parties, it started relying more and more on them, because on-ramping onto the crypto economy was not an easy feat, right? And that's how exchanges like FTX, Binance, WazirX in India, all of them grew into prominence, right? But one of the fundamental drawbacks of the entire business model was that these were centralized, traditional businesses built on top of a new asset class, which is crypto, but they were heavily unregulated and continued to operate in a very opaque manner. And that's what we saw happening with FTX as well.
I want to ask you a question about that before we go in, too much into the details, which is when you say they're operating, these entities are operating in a way that's more opaque, that sounds like 99% of the traditional finance system, right? Which I think is the point that you were making at the beginning. The idea is that inability to know the positions or the reliability of what somebody's saying about their positions was one of the things that made the financial crisis such a crisis. But I could say that the blockchain is very transparent, and even so, it can be hard to understand, right? Like that was the whole thing that people were saying about SBF's financials. They were like, we looked at the numbers that he was showing us, and we were at all of the presentations, and everything looked really good. And, the transactions mapped to the wallets that said they were the wallets that they had. So it seems to me like transparency alone isn't the solution to whatever this problem is.
I think we need to differentiate between centralized businesses like FTX and just plain solutions which are built on blockchains like Bitcoin and Ethereum. So if I had to explain in a sentence, I would say that businesses like FTX, they came along with all the risks that were already there with traditional finance, and they also carried along all the risks that were there with decentralized applications and cryptocurrencies, right? So in a way, they kind of carried the worst of both the worlds as well, right? Because they, worked in such an opaque manner. People had no idea with regards to how solvent an exchange is. Like, for example, if I transact on a decentralized lending protocol, right? Now, over there, everything is on the blockchain with regards to the health of that decentralized application and of that lending platform. That was not the case with FTX. So what has happened since the collapse of FTX is that we've seen this renewed interest among users to, first of all, own their own tokens. So there has been this age-old cry in the crypto space about not your keys, not your tokens, which basically means that if you don't hold your crypto assets in a private key which is owned by you, then eventually it doesn't belong to you. So what we have seen since the last week is that people have started moving their funds out of these trusted third parties, exchanges, to solutions where they hold access to their own keys. So gradually we are seeing that people are moving away from centralized parties like FTX to more decentralized platforms where at least the balance sheet, if you have to use the term, is visible for people to scrutinize.
We can say things like just move to a hardware wallet, but the reality is for 90 or more % of people, that is the equivalent of saying, build your own iPhone. Or host your email on your own servers, or self-host your website. It is a non-trivial technical undertaking to engage in the really actually decentralized business of crypto, which is one of the reasons that centralized entities like FTX were so popular. How are folks trying to overcome that?
I agree with you on that. I'm not going to completely diss centralized exchanges in this scenario because they've played a very important role with regards to making it very easy for users to on-ramp and come onto the crypto economy. So I believe that going forward, centralized exchanges still have a very important role to play for this industry to grow. What we need right now is clear regulation, because while it's a difficult task to regulate cryptocurrencies, all the businesses that have been built on top of these softwares, they can still be regulated. Because if we look at the business model of any exchange for that matter, like FTX, these are traditional age-old business models for which we do have a decent amount of guidelines and regulations available. I think it's just that how do we gradually put that onto these businesses which are built on crypto assets, and hence bring about more transparency, better disclosures, and better audits as well. That's going to be the key going forward, because I would say that self-regulation in the space has failed over the last decade, and it's time that regulators did step in and brought about more clear guidelines and regulations, especially around disclosures and how these exchanges, who are essentially custodians, how they handle the funds of their users.
Now, this is very much the line, obviously, that regulators have. They're like, hey, we're regulators. We'd love to regulate. It is increasingly in, countries like India, a line that is not necessarily being achieved through regulation, for example, but through things like taxation. But it's not necessarily the line that all of crypto is wholeheartedly embracing, because for every CEO who's going out there saying, we get it, regulate us, there are entire Telegram chats of people who are like, get your hands off my crypto. How dare you try to impose your Wall Street discipline on us? We're a totally different asset class. Why are you trying to use things like, the Howey test, which is what the US SEC uses in part to assess whether something is a security? on things like crypto. Based on your reporting so far and the folks that you're talking to, do you see these factions coming to any kind of middle ground?
The crypto community tends to be very polarized. And also, that's an understatement actually, but since the collapse of Luna earlier this year,
Terra USD and its sister token Luna lost their peg to the dollar in the last few weeks. They had a spectacular meltdown, sending prices to near zero and their market value to a
followed by the collapse of many other centralized lenders in the space. We have seen that users themselves have started demanding for more and more transparency and disclosures from all these players, right? So that is an organic movement that I would say that is coming from within the community, right? But users can only force a centralized business to do so much. At the end of the day, the regulators have to come and finally decide on, okay, this is what we require from you in order to make sure that you're working in a compliant manner, right? So that's where I think the difference has to be, because in the last couple of months, we have seen some regulatory action in the space, but the big ones have been around, let's say, the sanctioning of Tornado Cash.
The virtual currency mixer Tornado Cash was sanctioned by the U.S. Treasury Department after it was used to launder more than $7 billion worth of digital currency since its creation in 2019.
The crypto community is disgruntled that regulators are acting more and more on just defining the underlying tokens or censoring the underlying products rather than looking at these businesses which were selling investment products without proper license, without proper disclosures to people across the world. So I think that's where the divide is.
Up next, more from Bloomberg reporter Sid Shukla on the sometimes factionalism of the crypto industry. Crypto was designed to not have to rely on trusted third parties. And for anybody, I'm just going to shamelessly plug my colleague, Matt Levine, and the single story issue of Bloomberg Business Week that he wrote called The Crypto Story, which is also available online. And you can listen to it on this very podcast. We air special audio episodes on weekends, so please do check that out. The point that Matt made so brilliantly is that people fundamentally want to trust each other. Even if the system that they're designing is assumed to not require it, like just we have this tendency to move towards situations in which you can trust other people. And transparency doesn't necessarily solve for bad faith. And I think a lot of the response to Sam Bankman-Fried and a lot of the response to the FTX bankruptcy filing has been people feeling betrayed by this guy who would get up on stage, including at conferences put on by Bloomberg, and say things like, we were trying to set a high standard for the kinds of companies that we would say yes to helping bail out, or essentially making statements that presented them as the smartest guys in the room a lot of the time. I'm not sure regulators are necessarily equipped to solve bad faith 100% of the time, but I want you to just describe what in that ideal world of crypto self-policing and self-regulating that so many people in the space think is possible. How do you deal with actors who are accused of operating in bad faith? What do you actually do?
There are two ways one can handle this. One is the traditional way of having regulations and making sure that they are enforced, right? The other way, which some of the decentralized protocols already have in them, is have mechanisms built in which would penalize bad actors, right? But the thing is, the second way of doing it is kind of complex. It is convoluted. It's difficult for people to understand, okay, how is a bad actor gonna get punished by somebody who's not there to punish them, right? So I think there's a long road ahead for the sector to recover from here. The crisis of confidence is big this time around. And in order to gain back that confidence, in order to establish some legitimacy, the first thing that all the major players in the space, the thought leaders, the businesses, that they have to do is to make sure that they act in a compliant manner without even having regulations. If they can act in a compliant manner, disclose more than they should be disclosing, that is one way to bring about some confidence, because till now the practice has been that we will do the bare minimum. The other thing which a lot of the purists should do is that they should communicate what their project is, what their product is, to the layman in a simpler manner. Because let's be very honest, the UI, the user interface, and the user experience for anybody who wants to interact in this space without a centralized party like FTX, it's very cumbersome. You need to be really smart in order to even make
or just really tech savvy, because there are a lot of people who are really smart who are not tech savvy, and vice versa. So
exactly. So those roadblocks need to be removed. I think people should work on improving the user experience and the user interface more as things progress, because doesn't matter how decentralized or secure the underlying blockchain is or the product that's built on top of it, if people are not able to use it or understand it, they're going to fall back to platforms which they feel comfortable using, right? Mm-hmm. And that information asymmetry always leaves a window for bad actors to exploit people who may be a bit gullible or maybe just be a bit ignorant about how the space works. So I think that's how the players in the space should move forward.
Thank you, Sid. You can find more of Sid's reporting on the Bloomberg terminal and on Bloomberg.com. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacy-Marie Ishmael. We'll be back tomorrow.